This is Optimal Finance Daily, episode 1710. Should I refinance my mortgage? Part 2, by Scott Rieckens of playingwithfire.co. And I'm your host and personal finance enthusiast, Diana Merriam. Today's post is actually a continuation from yesterday. So if you're new here, it'd be best to listen to yesterday's episode first. But if you're all caught up, let's hear part 2 and continue optimizing your life. Should I refinance my mortgage? Part 2, by Scott Rieckens of playingwithfire.co. Is it better to refinance with your current mortgage company? You can refinance with the same lender, and there are some advantages to doing this. First, your relationship with them may make it easier to go through the process and finish refinancing quicker. They already know you and may not require quite as much documentation to complete the refinancing. They may also offer lower fees than other lenders, especially if they're eager to keep you as a customer. But refinancing with your current lender won't always be the best choice. If your lender isn't offering competitive interest rates and you're not getting a break on fees, sticking with your current lender isn't a good idea. The goal here is to reach 5 faster, and if your current lender isn't the best one to help you get there, it's time to jump ship. Do your best to avoid personal relationships getting in the way of your financial future. A lender who doesn't offer you the best rate isn't worth your loyalty. How to refinance your mortgage. Mortgage refinancing is a simple process, but it can be time-consuming to pick a lender and submit the final documentation they need. Here are the general steps you'll walk through when you refinance your mortgage. Set your goal for refinancing. What's your goal for refinancing your mortgage? Are you hoping to take advantage of low interest rates and save money on your mortgage? Or are you planning to change your ARM and lock in a fixed interest rate? When you figure out your goals, you'll be able to better assess your lending options. Check your credit history. Before starting the mortgage refinancing process, check your credit history. Lenders will check your credit before approving you for refinancing. So it's important to know that what's being reported on your credit history is accurate. You can pull your credit history for free using annualcreditreport.com. Check it for errors and dispute anything that isn't correct. Doing this before you apply will help you avoid surprises during the lending process. Research lenders. There are a number of places you can look for a mortgage. Research your options and the types of lenders you might want to work with. Lending options include credit unions. Credit unions often have more flexible underwriting standards, so they can offer mortgages to people who might have lower credit scores or smaller down payments. You might also find that they have lower fees and offer a more personalized service. But you usually have to qualify for membership before joining the credit union, so you'll need to find a credit union you qualify for. Banks. Unlike credit unions, with a bank, you don't need to be a member to have a mortgage. You also will probably find more up-to-date technology than with a credit union, and if you're working with a large bank, you'll have access to a network of branch locations. Mortgage companies. Also sometimes referred to as a direct lender, a mortgage lending company specializes in mortgages and doesn't offer other services. They aren't really that much different from a bank, but you might find slightly more relaxed qualifications with some of the lenders. Another option is to work with a mortgage broker. These aren't lenders, they're intermediaries that help borrowers find the right lender for a mortgage and may help facilitate the underwriting process. Compare rates and fees. Lenders don't all offer the same interest rates and fees. That's why you should get quotes from multiple lenders to make sure you're getting the best deal. But it can get a little confusing keeping track of what each lender charges while trying to make the best decision about which loan will save you the most money. That's why our favorite tool for comparing lenders is Credible. Credible is an online mortgage broker, which means they help you find the right mortgage for you. You don't have to fill out multiple time-consuming applications to get rates from different lenders. With Credible, you'll fill out just one application and you can compare rates from multiple lenders. Plus, the lenders Credible works with don't charge prepayment penalties or origination fees, so you won't be surprised by the end cost. And Credible is free to use and won't affect your credit score. Choose a lender. Once you've compared rates and you've found a lender that offers interest rates and fees that you like, it's time to complete the application process with them. Your lender will ask for a lot of documents to verify your income, so be ready with your W-2, pay stubs, and tax returns. Final approval can take time, so anticipate that your refinancing process will take at least 30 days to complete. Once it's complete, your old loan will be paid off, and you'll begin making payments on your new loan. Final thoughts. Mortgage refinancing can be a great tool to help you lower your monthly mortgage payments and pay less in interest. But making sure you're getting the best rate and not overpaying in fees does take due diligence and research. Take your time to crunch the numbers and make sure that the decision you make helps get you one step closer to FI. You just listened to part 2 of the post titled, Should I Refinance My Mortgage? By Scott Rieckens of playingwithfire.co. One of the most challenging parts of real estate investing is finding a deal that actually meets your investment goals. You've probably spent a ton of time scouring properties and plugging the numbers into spreadsheets, only to be disappointed that it didn't check out. Investing in real estate can quickly become a full-time job. The team over at Awning is trying to change that. Awning is a real estate investing platform that really puts the passive back into passive income. They're a brokerage, just like you're used to, except they have technology superpowers to help get the most out of your investment. Awning takes in your investment goals, pairs you with a dedicated advisor, and uses some pretty incredible technology to find and surface the best opportunities for you as soon as they become available. Awning's platform shows you everything you could possibly want to know, from rental and appreciation estimates, neighborhood trends, school scores, and more. If you're looking to supercharge your investment search and want to close on better deals while investing less time, give Awning a try. Head over to awning.com/OFD to start fast-tracking your real estate investing process. That's awning.com/OFD. Thanks again to Scott for outlining these considerations when refinancing. I wish I would have read an article like this before I looked into refinancing in 2020. I really only got one quote and quickly determined that the cost of refinancing wasn't worth it. Looking back, I wish I would have put a bit more effort into evaluating more options, because once I left my corporate job earlier this year, I became less appealing to lenders. When you're self-employed, lenders typically want to see 2 years of self-employment income before they will consider you for a refinance. I had mistakenly thought that my other assets and investment portfolio would have helped, but lenders seem to care mostly about income. Another thing to consider when you're reviewing all the costs and trying to see if a refinance makes sense is to calculate the break-even point. This is the point at which it starts making financial sense to refinance and take on the terms of a new mortgage. To determine the break-even point, you divide the costs of refinancing by the amount you save every month. The result is the amount of time it would take you to break even on the deal. So for example, let's say you save $50 per month by refinancing, but the loan comes with $5,000 in closing costs. It would take you 100 months, or a little over 8 years, to break even. If you stay in your house beyond the break-even point, you save on the loan. And that's another episode and weekend of Optimal Finance Daily in the books. Thank you for your support and for listening every day. I'll be back with more posts for you on Monday. So have a great rest of your weekend, and I'll catch you tomorrow where your optimal life awaits.